If you're one of the many people waiting for mortgage rates to go down before you purchase a home, this video's for you. In this video, we'll go over the data and the reasons why waiting for mortgage rates to go down is probably not the best bet for you. Conventional wisdom dictates that waiting for mortgage rates to go down is the smart play. It will cost you less per month and over the lifetime of the loan, and who doesn't like that? So waiting for the mortgage rates to go down is your best bet. However, while mortgage rates are getting the lion's share of the news lately, the thing that hasn't changed is the record low inventory. And so by waiting for mortgage rates to go down, you're gonna actually see the reemergence of an already compounded inventory problem. Let's dive in. So while I like to say how intelligent you are for waiting for mortgage rates, there's also hundreds of thousands of other people just like you waiting for mortgage rates to go down so the affordability goes up. However, what's not going up is currently the inventory. And the inventory both here in Luzerne County and nationwide is still in record low numbers. So what is gonna happen is, as mortgage rates go down, there's gonna be a new wave of buyers that are gonna flood the market again and start chewing up this inventory. What that's gonna lead to is multiple offers on homes, escalation clauses, highest and best offers going $10, $15, $30, $40,000 over listing price in order to get one. So what you have to do is to really learn the differences, to learn the math. If mortgage rates go down 1%, how much is that going to save you if you have to pay $20, $30, $40,000 over an already inflated listing price? One of the things that has been debated, but it's pretty well known, is that the price you pay for the house is finite. Your mortgage rate is not. So buying in a competitive market with low inventory, you're gonna pay more for the home. You're gonna have to go above the listing price in order to get it. You're gonna have to make concessions. You're gonna have to make your offer better than everyone else's. However, by doing that, you can't change that 5, 10, 15 years down the road. What you can change is, if you have a 7.5% mortgage rate right now, but that you get the house that you want, in 2, 3, 5 years, you have the ability to change your mortgage rate, refinance, and get that rate lower. So you really need to do the math yourself to see, but if you do, like me, you'll see that the mortgage rate changing is the easy fix. That getting the house at a reasonable price and being able to do home inspections because you don't have to waive them. Having contingencies to allow you to back out because you don't have to make your offer amazing because you're competing with 15 other offers. These things are probably better for you than that low interest rate because these things can't be changed and the interest rate can. If there's anything specific you'd like me to go over in more detail or cover, please drop a comment below. And please subscribe to this video for all of your latest real estate and specifically Luzerne County real estate info. Take care.